Assalamu Alaikum everyone, welcome back to another video. I hope you have a wonderful day. In yesterday's video we talked about the S&P 500 and the reason why I have started a new set of videos where I will be looking at the S&P 500 sectors, all 11 of them, and find Sharia compliant companies within that. And the reason I want to do that was because some of you are new to investing, and you have been asking questions about what companies to look for and how to find good companies and so on. So I thought if I can give you 5 companies from each sector, then you've got at least the options to pick from. Again, I'm not a financial advisor, but I'm just giving you some ideas of some companies that you can then go away and research about. Okay, so if you like this type of content, please give the videos a like. It really genuinely helps the channel a lot. Okay, that's all I ask. I'm not selling your course or anything like that, but all I ask is just give the videos a like, subscribe to the channel, let me know if you have any questions. Okay, so today's video we are going to look at the healthcare sector. Okay, and in the healthcare there's quite a lot of companies in that sector whose business I absolutely have no idea of, right? They are quite difficult to understand for me because I'm not a healthcare profession. If you are in that industry, then it's perfect for you. Okay, for me it's easy to understand for like technology companies because that's what my profession is, as well as consumer staples, consumer discretionaries, and so on, financials. I can easily see where they're heading and so on, but these companies are very difficult because their product, it might be in demand, it might not be in demand, God forbid, you know what I mean? It's a tough one, and a lot of them deal with a lot of unethical situations. Again, all these companies will have certain things that they've done wrong, but as long as they obviously not continuously doing that, hopefully that will be a good thing, right? But yeah, so just let me talk about the 5 companies. All I would like you to do after that is just to go away and do your research and find out each one of these companies. If you work in that healthcare sector, then it might be actually easier for you to get your head around. And like I said, I will really appreciate if you can give the videos a like. Okay, so the first company we look at is J&J. J&J is probably one of the biggest companies out there. It has 450 billion market cap, which is absolutely huge. They have wide variety of products from consumer health, basically from the healthcare side of it, from consumer health segment, they've got loads of different products from Avena Baby, from Listerine, for example, for brand. They have got skincare brands as well, Clean and Clear, and all of these things. And now what they're trying to do in the next probably year or so is to spin off the consumer segment. Okay, so that section, so we'll see how that goes, but currently they are trading $170 per share. They have a wide economic moat. They have 2.65% dividend yield. Latest dividend increase was 7%. The 5-year growth rate 6%. Payout ratio, again, normally I look for 6 and above percent, so it's okay for now. Ideally, if you can get 7 or more, it's absolutely perfect. Okay, payout ratio, especially if you are a dividend growth investor, you're looking for companies that increase that dividend every single year, not just pay the dividend. Okay, payout ratio only 43, so there's room for improvement. Dividend streak in the last, basically they have increased this dividend for 59 years. This is a dividend king and probably one of the best out there. Dividend safety 99%, profit margin 20%, free cash flow here almost to $20 billion. In the last 10 years they have actually give shareholders about 11% total return, and next basically 5 years they're expecting 4% growth every single year in the next 5 years. Okay, 4%. Morningstar is actually saying fairly valued at the moment, $164 per share. Right now it's 170, so it's slightly higher than right. A lot of the companies we're looking at today might be on the high end because they've seen as a defensive stocks. Because remember, God forbid, if your family members are sick, that becomes a necessity, right? For that reason, you would obviously pay. Even if you are sick yourself, God forbid, obviously you're not going to worry about the money. You will actually go and get yourself treated, especially if you live in the US and countries like that, right? And you will have to pay for your subscription. You have to pay for seeing basically a doctor and so on. So for that reason, these companies will benefit a lot from that side of things. And for that reason, when it comes to inflation, they do tend to do well, as well as the consumer staples, which is more to do with our day-to-day stuff that we need. Okay, Right, so the next company is Eli Lilly, and another company that's in the healthcare sector. This company deals with a lot of diabetes products, like for example type 2 diabetes, breast cancer, all sorts of products out there. And when I looked at their website and just trying to find, it is a little bit scary because they have so many products that are just, God forbid any of these things happen to us, God forbid, genuinely. But yeah, they're a great company. Again, $331 billion market cap. So that tells us how huge this company is. And from bipolar to diabetes, especially type 2 diabetes and so on, their products are very much in demand. So God forbid we ever need their products. But it has wide economic moat, $351 per share, dividend yield 1.12, latest dividend increase is 15%, 5-year growth rate about 11%, payout ratio 44%, and dividend streak was just 7%. 7 years of increasing that dividend. 96% when it comes to dividend safety, profit margin almost 20%, free cash flow about almost $5 billion, and total return in the last 10 years we're looking at about 22%, and 18% growth in the expectation for the next 5 years for every single year, and 36% premium right now, $256 per share, where it should be right now. It probably needs to drop about $100 just to be around that area, and then probably below that. So yeah, it's a very expensive company. Again, another very defensive company, because right now everything else has been going down. These companies have been actually going up quite a bit, hence why they are very expensive. So the next company is Thermo Fisher Scientific, and it's $198 billion market cap. This company is one of the biggest out there, and I've been actually trying to get this company into my portfolio, but every time I read about what they actually do, it is quite difficult to understand for someone who absolutely hates. Listen, I'm the kid who used to faint every time I go to the hospital. That basically shows you how much I hate these things. But they actually do a lot of basically things like analytical instruments, specialty diagnosis in the laboratory products and so on. And they have a wide economic moat, $514 per share, dividend yield 0.23. That's terrible. You might as well not pay that. Anyway, latest dividend increase 15%, which is actually quite nice. So hopefully this will go up in the next few years. And the fact that the price is quite high, I'm assuming that's not bad actually. Okay. Payout ratio, we're looking at 5-year growth rate of 12%. Payout ratio. So again, actually they are increasing it really nicely. Payout ratio just 4%, obviously. Dividend streak is only 4 years, so they have only been paying for 4 years. Okay, that's interesting. Safety 72%, profit margin we're looking at about 17%. Free cash flow right now we're looking at about $6.3 billion. Total return in the last 10 years 23, almost to 24% from this company. So they're more of a growth side than actually dividend company, which is actually quite nice. Okay, it's not always about just the dividends. Sometimes you just wanted that price appreciation as well, obviously. 7% growth expectation in the earnings wise for the next 5 years, every single year. 14% discounted right now, $590 per share. Okay, so not bad, but probably needs to come down a little bit more than that, because right now when you look at the markets and you find the companies that are down like 10, 15, basically 20-30% down, and only 15% down. Again, not bad. Okay, it might not be down, it might just be undervalued right now, to be honest with you. But next company is a one that I own in my portfolio, and that is Merck. And this company is again in the healthcare sector. It operates through 2 segments, pharmaceutical and animal healthcare. They have loads of products for cardiovascular and diabetes and vaccines and all sorts of things, preventative pediatric diseases and so on. And as well as that, they have a product called Keytruda, which is basically used for cancer treatment. So yeah, $247 billion market cap. It has a wide economic moat. Price right now, we're looking about $97 per share. Dividend yield 2.82%. Latest dividend increase was 6%. 5-year growth rate 7%. And payout ratio only 35%. And dividend streak 10 years. Safety 99%. I'll be honest with you, this is probably one of the best companies out there when it comes to in terms of the healthcare, and this is the reason I own it. This is the reason why I had this company in my portfolio from day one, and their product is actually easy to get my head around, because I do have a friend who's actually family was using this product, and that's how I came across, and God forbid, alhamdulillah, they are now better. So yeah, profit margin 29%, free cash flow we're looking about 14%, total return in the last 10 years about 10%. Not great, but next basically 5 years we're expecting every single year the earnings to grow by 11%. Fairly valued right now 93 is where it should be. Right now is 97. I've been buying this stock when it was in the 70s, and I was buying it heavily. I think I own 20 something shares. I can't remember exactly. Where is it? 27 shares. I would love to get to 30 and leave it out there, but right now it's up almost to 48%, or 700, over 700 pounds right now. So yeah, this is one of the companies I own in my portfolio. And the final company we're looking at, Apple Laboratories. This company actually was basically a parent company of an AbbVie, which I wanted to include AbbVie, but then when I look at the financials, it doesn't look as good as ABT. And this is a huge company established. Basically, they have a pharmaceutical products, they have diagnosis products, they have nutritional products, they have a medical devices products. So they've got loads of different types of products. They currently are market cap wise $172 billion. They had a narrow economic mode. Price is $97 per share, 1.92% dividend yield. Latest dividend increase was 4%. In terms of the five, AbbVie would have been better in terms of growth wise, but on dividend growth, but obviously this is a great company too. Latest it was 4%, 5-year growth rate 12%, payout ratio 33%, dividend streak 50 years. So they now became dividend kings. Safety is 71%, which tells us that dividends are absolutely safe. There's nothing to worry about. And if they increase it 4%, 5%, 6% every single year, that's absolutely perfect. Profit margin 17%, free cash flow $8.4 billion, total return 8% in the last 10 years, 11% growth expectations for the next 5 years, and fairly valued right now 104, where it should be right now is $97 per share. There you have it, 5 different companies that are in the healthcare sector. Again, their products, like I said, is very difficult for me to kind of get my head around. Some of them are okay with the J&J and Merck because I've done a lot of research and I actually added them to my portfolio. But the other companies, obviously, if you're interested, really, you need to know their products. Genuinely, I can't stress to you basically that enough. So if these companies are selling diabetes products, find out basically what is going on in that world. Okay, God forbid, I don't like doing those kind of research, but it is really important to find out what is going on. How much do they sell these products? And also the most important things with these companies is, do they have any patent that's actually going to run out soon? Because AbbVie, I think AbbVie has got one coming up, not Apple, the sister company or whatever. It's got one that's running out soon, and a lot of companies will now start copying that. And if that happens, what happens to their revenue? Does it actually decline and so on? So you have to be really careful. If when Keytruda runs out for Merck, for example, what's going to happen to the business? Okay, so yeah, you have to do your research. You have to find out their pipeline. Okay, how many products they've got coming up in the next whatever years. How many of them are in stage 1, stage 2, stage 3? Okay, do they have approval already for certain products that's needed? There's so much to do in this field. So if you are already working in that field, then it's perfect for you. Otherwise, you have to be really careful and learn about the products. For me, I can do J&J, I can do Merck and Amgen. Those 3 should be enough for now. I had Pfizer as well, but I sold out recently. But that's the company that I probably will add again, because their business is kind of, for me, it's kind of easy to get my head around. Although there was some news out recently that I didn't like about Pfizer. But anyway, so let's have a quick look at in terms of Sharia compliant, and they are all absolutely fine. In terms of business activity, we're looking at 99% or more. We're looking at interest bearing, so the highest right now is basically TMO. Other than that, they're absolutely fine. Remember, we're looking for less than 30% for these things, okay, for these two, and we're looking for less than 5% when it comes to this. Okay, so this is absolutely fine. There's no issues there according to Zoya. there you have it. 5 different companies in the healthcare sector. Like I've already said, I do own Amgen, I do own J&J and Merck. Actually, I do own Medtronic as well, which is basically does the devices side of things. Okay, right. So there you have it. If you enjoy this kind of content, please give the videos a like, subscribe to the channel. Have a wonderful day. Assalamu Alaikum.